Well, welcome everybody. Steven Sitkowski. This is my Building Wealth podcast. I'm actually recording on Tuesday of this week. Typically, I do Monday. I'm doing Tuesday because I was flying yesterday, travel day, for fun. I don't really travel for business anymore. I did that long enough running around the world teaching. But my wife and I went to um, Lake Louise up in Alberta, Canada. Absolutely spectacular. I got to tell you, I've seen a lot of stuff in my life, but that's got to be right near the top of the list in terms of sheer beauty. To look out from our hotel room over the water and to see these mountains formed by, well, that whole ravine was formed by glaciers, and actually see glaciers on the side of the structure. Um, Absolutely amazing. Went canoeing. We stayed at the Fairmont Hotel. Couldn't recommend it any higher. It was just a great experience. So, yesterday was a travel day. I've taught all day today, but I still wanted to come and spend some time with all you good folks, letting you know what's going on in the market, what we're watching, what we're seeing. So glad to have you with. The popularity of this has exceeded my expectations. I gotta tell you. So now that I've got people kind of hooked on it, I didn't want to miss a week. I'm sure everybody would have understood, but I wouldn't have felt good about it. And also, I had a submission. And by the way, if you have questions or topics you want me to cover, you just send it to me, Steve Sitkowski at gmail.com, where somebody was interested in learning how to buy a stock at a discounted price using a short put. So I'll talk about that strategy at the end today. All right, a little bit of my background. I have now trained somewhere between 1.5 million and 2 million people. That's a lot of folks, you know? I do that and I'm like, I can't believe that has happened. Um, but yeah, I still enjoy the teaching, and I would do this if I knew other topics that I thought would help you. There's not many of them I do know. Like I could do a whole class for you on personal development and becoming the best and getting the best out of yourself. And maybe one day I'll do that. I actually created a whole video on that topic 30 years ago called Mastery of the Mind. But for now, we're going to stick to the money side of things. I want you to know that what we do here is for educational purposes only, not intended as investment advice, even though, I may talk about specific companies or opportunities that I see. I just don't know if it would be appropriate for you because I don't know anything about your personal circumstances. So, what's moving the markets? Boy, it has been a bumpy ride the last couple weeks. I don't think that there's a coincidence as to what's going on with the US and Iraq, or excuse me, Iran. Um, it seems like it wasn't that long ago, it was Iraq, right? Now it's Iran, Iran. In any event, um, the chip sector has been dragging down the whole technology complex. And if you're wondering, well, is there a problem with these companies? No. Their problem was their success, that a lot of these um, stocks just moved so fast to the upside that, well, here, let me give you an example. And I realize some of you are in audio only mode. Some of you are able to see my screen. But I'll go ahead and articulate my point. But if we go year to date, um, and we look at some of the returns year-to-date performance. Okay. So you have Micron Technology up 187%, Intel 133%, AMD 112%. Any surprise that some of these stocks would be coming back down to earth? No. I think SanDisk at one point was up 600%. So, yeah, that's just part of what happens. And you've heard me talk about that previously, right? Stocks that have exponential gains, parabolic rises. So, I think there's going to be some real buying opportunities out there on certain names, like Micron, as an example. But for right now, we're enduring a little bit of pain in that area. I think China is being seen as more of a threat now to US technology. I think this is going to be a running theme. So, about a year or so ago, there was this rumor about a Chinese company called DeepSeek that they could do basically what NVIDIA does for a tenth of the cost. Turned out it wasn't true, but it caused NVIDIA's stock price to fall about 30%, at which point I bought more, which turned out to be great. Um, but I think you're going to start seeing this. And, one of the things that's kind of going on is that in China, the government will get involved in business to help business. And in the US, we don't typically do that, right? We try to separate, although we've made an investment from time to time. And, we've bailed out banks and insurance companies and General Motors. This was some years ago, recently made an investment in Intel. But that's not the norm here. I think it's going to have to be. And I hate it because I'm going to be very candid with you. I don't trust the judgment of the government. I don't trust their motivation at all. Then you're going to have politicians that are making policy based on investments that they make. We've already seen that happen. So that's what bothers me about it. But how are we going to compete with Chinese companies that have the backing of the Chinese government? It's going to be virtually impossible. And I'm going to tell you, we need to win the AI game because there's so much at stake. I think maybe some of those latest rumors could be part of the reason why we've got pressure on the chip manufacturers here in the US. Of course, we've also seen Korean technology stocks fall a bunch. The Fed will be announcing their rate decision tomorrow, Wednesday. And let me tell you what you want to be paying attention to. Kind of comes in three parts. First, there'll be the announcement, right, where the Fed chairman will come on and talk about their dual mandate and that they're going to be holding interest rates where they are. There's nothing much to that. That's not a market mover, unless he decided to raise rates, which I don't think that's conceivable. So that'll go along as planned. It'll be the press conference that follows. So he will make the announcement. Well, the announcement will be made at 2 o'clock Eastern. Then at 2:30 Eastern, the chairman comes on, reiterates what we at that point will all know, and then makes a statement and takes questions from the press. And that's where we get some insight into what the Fed is thinking and what their plans might be in the near future. And that is a potential market mover. Then what will happen is that night, Wall Street will digest every word of that press conference. And then you'll see the follow through as the market responds to all of that. So it's the initial announcement, it's the press conference, then, the last bit of trading. Most of the time, the market goes down after these announcements, and then it'll be what happens the next day. But all that's kind of a big deal. Plus, we've got some big earnings announcements this week that I'll tell you about. 10-year Treasury was up just a little bit at 4.647. I'm never happy with the 10-year being above 4.5, but as long as it keeps from going above 5%, we'll be okay. Below 4.5, I sleep better. Stock market does not like high interest rates. And oil prices have been falling. Now, I'm not quite sure how to describe what is happening between the US and Iran and not sound like an idiot, but I think for 11 days we hit strategic spots, um, and then we just stopped. There was no real reason given why we stopped. It wasn't like, the president came out and announced that we're in renewed negotiations, or that Iran reached out to him, or that this is a season. It was nothing. It was just, yeah, we're not hitting them with any missiles today. And so oil prices have come down. How long that's going to stick, I don't know. Generally, I have a pretty good feel for how things are going. This deal, you got me. I just don't know how it's going to end up. I saw an interview with Kevin O'Leary, and he says what the US is doing is tenderizing Iran. That basically we're like, hey, you going to open the Strait of Hormuz? No. Okay, listen, at 10 o'clock, we're going to blow up that bridge. So just make sure all your people are off of it. And then we go blow it up. And then the next day, hey, are you ready to open the strait? Make a deal? No. Okay, well, then we're going to take out this refinery. And that's what we're doing until they just get sick of it and cry uncle. I don't really see them crying uncle based on what's happened so far, but it's sort of frustrating because it definitely impacts the market. I realize it impacts more than the stock market, but it definitely impacts the market. It makes it difficult to figure out what's going to happen next. Last week's market breadth. So um, we have the market breadth for the New York Stock Exchange and for the NASDAQ. So between the two, it's like 9,000 stocks being traded. So generally, every week we look at two things: number of advancers versus decliners, and new highs versus new lows. Gives us a sense for market direction. So what did we have? 1,155 new highs on the New York Stock Exchange compared to 1,670 new lows. Well, that's not good. 175 new 52-week highs versus 212 52-week lows. That's not good either. It's not horrific, but it's not good. The NASDAQ was even worse. 1,759 new highs. We had double that, or excuse me, stocks that moved higher. We had double the number of stocks that moved lower, 3,456. 52-week highs, 271. New lows, 633. So we have gone from bullish to short-term bearish. Now, 1 week does not a trend make, but last week was ugly, and it almost felt like some dark cloud was hanging over the markets. And I think you could trace the origin of that dark cloud to the Middle East, right? To the conflict going on there. And until that conflict has some kind of permanent resolution, I think we're going to continue to deal with these big ups and downs, right? Risk is definitely elevated. Last week's heat map. So, you can see pockets of red and green. Some of the red, they were off a bunch. So, Alphabet, formerly known as Google, and I'll have some more comment on that when I show you some numbers. They had their earnings announcement, and the stock was down for the week almost 8%. Amazon, 6%. Meta, almost 8%. Tesla, down almost 18%. So there were some big losers. On the winner side, AMD up over 5%, Micron over 8%, SanDisk, Seagate Technology, Dell, Western Digital, they were all up. The energy complex was up because what? Oil prices went up. So, not a very pretty picture on this heat map. Now, the reason the market is up on the year, in spite of geopolitical events, in spite of higher oil prices, in spite of higher interest rates, earnings. The earnings numbers coming in are almost hard to believe. Second quarter earnings so far are up 37.9% year over year. You got to be kidding me. That is unfathomable. That in spite of everything, tariffs, war, companies are doing great. Now, I'm going to tell you one of the trends that's out there, and that is that companies are making a lot of money, but they're not using it for buybacks. They're not using it for dividends the way that they were. Instead, they're investing for their future, mostly in AI technology, and Wall Street's getting sick of it. That's what's happening. Wall Street is like, are we really going to get a return on investment from these billions and billions of dollars that some of these companies are spending? So the jury's still out. They will exercise patience up until a point, and then it's like, show me the money. Profit margins are going crazy. So the average profit margin of a S&P 500 company down for the last, I don't know, 10 years or so, 12 to 13%. We're up to almost 16% for this quarter. It's fantastic. Now, I brought up Alphabet, and this is how earnings can be unpredictable. So when you look at their earnings per share, record, record profits, almost double the previous quarter. Wouldn't you think that stock would be skyrocketing? Nope. And why not? Because they also announced as part of their earnings call, they're going to spend another $205 billion. Remember when a million used to be a lot of money? There's an old joke, a million here, a million there. Before you know it, you got a lot of money. Now they make the same joke about billions. 205, that's 20% of $1 trillion. So Wall Street punished them. Here's something else that happened with Alphabet. One of the things that I teach is you want to keep an eye, and I taught this during one of the podcasts, want to keep an eye on companies' free cash flow, right? That's the amount of money that basically they have left over after all expenses and R&D and everything else. Well, because they're investing in all the future stuff, for the first time in the history of the company, they had negative free cash flow. Incredible profits, negative free cash flow. Markets don't like that. The NASDAQ appears to be a good value at the moment. So if you look at the 10-year average, the forward PE for the last 10 years, 26 times. At present, 22.7 times. It is trading at a 10% discount to historical PE. So there are areas of the market that are clearly overbought. NASDAQ is not one of them. Average retail investor has lost money this year. They're down 12.7%, even though the market is up 8%. And how is that possible? When I teach more extended classes, I talk about the three secrets of success in anything. It'll come down to what you know, who you listen to, and what action you take. And the problem is, under what you know, the average retail investor is damn near clueless. Don't anybody be offended by that. It's just a fact. Does the average retail investor know how to read a financial statement of a publicly traded company? No. Do they know how to follow what the big institutions are buying and selling? No. Do they know how to analyze a chart and determine where the price of a stock is likely to go next? No. Do you think the more sophisticated investors know how to do that? Of course they do. But there's that lack of knowledge, which is why the average retail investor is down, even though the market is up. Is that crazy? Retail investors have been pulling back. So, in other words, when you look at the net flow of funds going into equities, it is the lowest level it's been since the pandemic. Investors are nervous. I don't blame them. There's a lot to be nervous about. Here's one of them: inflation worries. So, when most people think of higher oil prices, all they relate it to is, "Oh, it's going to cost me more to fill my gas tank." It is so much more wide reaching than that, right? All products go up, cost of shipping goes up. And that's why you can see, those of you that are able to view my screen, as oil prices go up, interest rates go up. And generally, when interest rates go up, stock prices come down. You just got to learn how to connect the dots a little bit. Market sentiment. So last week, when they did this survey of independent investors, and 44.9% said the market would go up over the next 6 months, and 32.9% said it would go down. I told you when the survey came out this week, those numbers would be dramatically different, in my opinion. That's exactly what happened. 29.6% now are bullish, 42.3% are bearish. And I think it's all the uncertainty due to the Middle East. Plus, people are just getting pissy because the cost of things keep going up, including, the people that can afford that the worst and that are carrying heavy balances on their credit cards. And I don't carry a credit card balance, thankfully. There was a time I did. This just isn't that time of my life. But I can only imagine what average interest rate is on credit cards. It's got to be north of 20%. And that's got to really upset some people. The fear greed index for investors, right in the middle of fear. And it probably should be. I think that is reasonable given what's going on right now. The future of interest rates. Well, I think we're going to know a lot more after the press conference with Chairman Kevin Warsh, who I like that guy. Everybody I talk to tells me he's just brilliant. But the latest forecast is for them to hold interest rates on July 29th and then to raise interest rates in September and then raise them again in December. I don't think we're going to get two rate increases between now and the end of the year. I think we're going to get one, but if we hammer out some deal with Iran in the next week, very unlikely. But if we did, I don't think we would get any rate increases. I think that the president, who wants lower interest rates, he just came out and said that through the media yesterday, has picked somebody who he thinks will try to lower interest rates. I think Warsh is going to do everything he can to minimize the rate increases. Um, but I think we're going to get one. I think it's going to take another month for this war to resolve itself. Sector performance year to date, S&P is up about 8.25%. Forget about energy, which is up 30% because that's all war driven. The big winner for this year so far is industrials. And that is, the build out of these data centers. Technology is now up 14% year to date, which is still great. We're only a little more than halfway through the year. And there's two sectors that are down year to date. Communications, it's down 2.5%. Consumer discretionary, right? That is a lack of faith in the strength of the consumer moving forward. That's down 7%. It's underperforming the S&P by 15%. So this week's earnings announcements, what is it that could move the market? Visa, that's Tuesday after the bell. Um, and why Visa? Because they're going to talk about the strength of the consumer. Then Wednesday after the bell, we've got Microsoft and Meta. They're kind of a big deal. And then before the market opens on Thursday, by the way, there's a slew of inflation data coming out and other data on Thursday of this week. But we have MasterCard, which will also talk about the consumer. And then for the little niche market, Ferrari. Ferrari's going to let us know how are rich people doing. I wonder if you still have to wait 2 years to pay $500,000 for a car if you wanted a Ferrari. So news coming out this week. Here, let me show you what you want to follow. Obviously, on Wednesday, we've got the Fed announcements. On Thursday is going to be a really big day. We have initial jobless claims. They come out every Thursday morning. GDP is expected to come in at a modest 1.8%. Personal income and personal spending. This sounds like America. Personal income is expected to go up 0.3%. Personal spending expected to go up 0.3%. Oh, God bless the red, white, and blue. PCE, that's personal consumption expenditure. That is basically inflation. Last month, 4.1%. They're expecting this month 3.7%. Core, if you take out the cost of food and energy, um, only going up 3.3%, still well above the Fed's target of 2. So Wednesday and Thursday, you got to be paying attention. All right, let's take a look at the chart. First thing we'll pull up is the S&P 500. So what I have drawn on the chart is we are forming a bit of a wedge, which is a chart pattern indicative of a near-term breakout. So if we break above the upper trend line, market's likely to go higher. Below the lower trend line, market's likely to go lower. We don't know which way it'll break until it does. I can tell you this, we're a lot closer to that lower trend line than we are the upper trend line right now. And we are trading slightly below the 50-day moving average. And the 50-day moving average, the slope is kind of rolled over into a neutral position. So this chart says to me, I'm not sure what's going to happen next. And I think for good reason. Let's take a look at the VIX, which is the volatility or the fear index. It was down today 2.5%. So not long ago, it was sitting right near supported around 15, which shows a lot of complacency in the market. Now it's been bumped up to over 18. Not really noteworthy until we get above 20. Above 20, that means investors are a little nervous, a little gun shy. So that's where our charts sit. All right, let me get into this subject that was asked of me, and that is how can you use an option to potentially buy a stock at a discount? So I'm going to be referencing put options. Okay. So a call option gives you the right to buy a stock. A put option gives you the right to sell a stock if you owned the put. If you were short the put, you collected whatever the premium was for that put. And we'll take a look at a real world example in a second. In exchange for the obligation to buy that stock at whatever the strike price is. So the person that requested, and I'm appreciative of the request, that I give an example, they were hoping I could show them how to buy a $100 stock for $1. I let them know via email, not a chance, right? Because the market's not going to pay you anything for agreeing to buy a $100 stock for $1. So let's look at something that would be real world, shall we? Let's say, and I'm going to use something that I think, unfortunately, it's an expensive stock, but Micron Technology. So this stock got all the way up to 12.55. It's now down to 8.20. They had an amazing earnings in the last quarter. The company's got a backlog for their product. And they're sitting down here at a level of support. Here, I'll draw the line so that you can see it. Okay. So you can see, one, almost two, three, four touch points at this level. So what if you felt like at 820, Micron was a good investment and you were thinking about buying 100 shares? That's 82 grand, but there are people that do this, including yours truly. Okay. So what would that look like if you wanted to short a put? Let's say we're going to go out 24 days, the third Friday in August. What if I were willing to commit to buying Micron for $800 a share, what would that look like? Okay. So here's 800. So I'm going to short, say one contract. Okay. So I put in a -1 and I'm going to hit the trade button and I'm going to see what I would get paid for selling that put option and taking on the responsibility that, hey, if Micron goes below 800, I could be forced to buy it. I would get paid a minimum of $70.50 a share. So let's call it 70. So if we have an obligation to buy the stock at 800 and we get paid 70, what is our net cost? 730. So now you're buying an $820 stock for 730, which is a discount of $90 per share. That's how smart people buy stocks. The rest of the world just goes and pays 820 bucks a share. See the difference? It is massive. By the way, when you sell that put option, when do you get paid? Instantly. Soon as that order fills, boom, that money ends up in your account. It is a way for you to get paid in exchange for your willingness to buy a stock at a discount. I love that strategy. So, if there's a topic you would like for me to discuss or a question that you have for me, shoot me a note at stevesitkowski@gmail.com and I'll incorporate it into my next webinar. So, all right, awesome. Hey, listen, thanks for watching. I can't believe how popular this is getting. I really enjoy doing it. I love sharing the knowledge. So as long as you enjoy consuming it, that looks like a pretty good match. So I'll be back with you next week. Until then, be safe, be blessed. Bye for now.